Hi guys, welcome this afternoon. Thank you so much for joining us. This is Molly Van Kampen here at Greenshades Software. We're going to go ahead and give some of our other participants a couple minutes, maybe one or two, to join us. Just wanted to reach out and say hello and thank you for being here for our webinar today. We're going to go ahead again and get started in just a minute or so. So thanks so much. We will be back with you soon. All right, so welcome again to everyone who's joining us today. We're going to go ahead and get started. This is Molly Van Kampen with Greenshades Software, and our webinar today is going to be on some of the compliance changes and things we have to be thinking about for year-end 2021. Hard to believe that as we are coming together today, it is December 6th, and we are already so close to year-end. This year flew by, as I think the last couple might have. As we go forward and kind of talk through our presentation today, I do just want to do a friendly reminder. We're going to be covering some compliance items, some things we want to think about for year end, and some of those information returns, those year end pieces of information we're sending out to our employees and our vendors. The information that we provide today, whether it's in written format, and we do have some information available in the handout section, which is the PDF version of our presentation today, or whether it's some of the information that's available in the recorded session or that I'm talking through. This information is not intended to be formal legal advice. It is not intended to be in conflict with any of your regular advisors or perhaps some of those policies and procedures that you have worked through with maybe your human resources or some other legal counsel. We want to make sure that you recognize that this is from our perspective as a high-level industry overview and not intended to be legal advice. If you do have questions that need an attorney or need some more specific information, Greenshades does partner with an organization called My HR Counsel. That information is available throughout the slide deck and also on our website if you have any questions about that. As I mentioned early, I am here. This is me, Molly Van Kampen. I am a certified payroll professional. I've been the chief evangelist here or a member of the Greenshades software team for a long time. I love talking about payroll. I love talking about compliance. We are going to cover some information on our 1099 or vendor workers as well today. It's been my great privilege to be part of Greenshades for over 16 years. Here at Greenshades, we come to work every day to really prevent and solve for problems that our customers see in the HR and vendor space. We've spent all of our time providing tax and compliance, HR software and utilities to really ensure that we were able to be those industry leaders for our customers and our partners in the Microsoft Dynamics and outside of that Dynamics space. We've been doing this for a long time, serving thousands of customers across North America. We've built our business really by offering those tools and utilities, whether it was our initial product out in the market that really offered the electronic filing compliance for payroll taxes, or whether it was some of our additional components we've added over the years, maybe information about benefits management, those solutions for time entry and attendance, any of our additional compliance pieces around Affordable Care Act or some of the state-specific rules and regulations, local tax management, or of course my very hot topic at year end, our vendor management through 1099 software. We've had these components out in the marketplace for a lot of years, all working with a number of different ERP solutions. As we talk about the evolution of Greenshades, we've become subject matter experts in all of these areas. We've put them together, wrapped them around a Greenshades opportunity for gross to net calculation for payroll. So now in addition to offering these solutions that work with your ERP solution, whether it is a Microsoft Dynamics solution, maybe the Sage Intacct product, we also offer a fully encapsulated payroll HCM that can still integrate with those ERP solutions, but maybe replace if necessary, or create a payroll solution for some of those ERP pieces that might not have a satisfactory embedded payroll component. So that's my little conversation about Greenshades. For those of you who have joined us and are not familiar with our webinar series, what we're going to kind of cover today are some of the things that we can do from a compliance perspective, some of the changes and the requirements we need to know for our year-end forms. As this is a go-to webinar, as participants, you absolutely have the opportunity to interact, but we do ask that you do that through either raising your hand, or most conveniently, if you type some questions into the question bar, I will stop a couple of times throughout our presentation to make sure I answer those questions. A good amount of the time we're going to spend today is dedicated to answering those questions that you may have from a compliance perspective. So please don't be shy in entering your questions into the question bar. I'll get to as many of them as I can. And those that I don't get an opportunity to answer today in our session, we'll go ahead and answer either in a frequently asked question email after our webinar, or we can reach out directly to you if you have a question very specific to your organization. So one of the most important things that we do when talking about our year-end forms and some of the items that we're going to talk about compliance for year-end is making sure that we are prepared going into the new year. And so if you have heard me talk about year-end for any of the years that I have been at Greenshades, one of the most important things we can do from a payroll perspective is make sure that our wage base is established correctly in our accounting or our payroll package. So we want to make sure that we have been throughout this year applying the Social Security wage base for 2021. I'm not going to spend a ton of time on this, but this is one of the areas that we find causing the most errors in W-2 submissions outside of Social Security number questions or mismatches. And that is that the payroll system has run payroll for the entirety of the year, maybe using a previous year wage base when there has been an adjustment in that wage base. And as a result, there should be an additional withholding for those high earning individuals on their Social Security for the current year. So for your opportunity to kind of see what the changes have been, we can see that this year we did have an increase in that wage base from $137,700 to $142,800 for 2021. This is a good time to take a look at your employees, especially those that you know are higher income earners, and make sure that you are double checking that withholding has happened for that extra space between the $137,700 from last year and then the $142,800 for this year. Now, of course, it's considerably easier to make adjustments to that if you catch that withholding error, if you have not been applying the most current wage base, if you run your last couple of pay runs through the year and catch up any shortfall in that reporting. However, I also want to make sure that you recognize, for the purpose of filing W-2s with the Social Security Administration, if you haven't been using the appropriate wage base and you do submit W-2s with that wage base from last year in place, it will cause a challenge through AccuWage. It will cause an error in submitting your W-2s electronically. You want to make sure that when you get to W-2 time and you've created your W-2s, that for any individual who has $142,800 or more in box 1, that box 4 is at $8,853.60. Now, simple math, that's 6.2% of $142,800, but a very easy check when you're going through at the end of the year. If you're using Microsoft Dynamics GP, you can use a smart list or another type of reporting function to spot check those employees that you know are highly compensated or have made over that $142,800 amount. If we go back and talk about what a common error this happens to be, what we'll see a lot of times is that will have capped if that Social Security wage base hasn't been updated, and we will see those previous amounts, and most notably that box 4 amount will be that $8,537.40 from the previous year. So worth a couple of extra sentences about this in this year. There was an adjustment. We expect to see an adjustment again for next year. Really easy check that you can do here. If you are using the Greenshades year-end forms product, we have a number of reports that will enable you to take a look at these as well as viewing your forms in the grid view to be able to make sure that you're spot checking that box 4 amount. It's a single dollar amount you're checking for those folks that have earned over the wage base amount. Again, if we have any questions, feel free to type them into the box. I will get to questions as they appear. As we're here today, I am joined with Tyler Smythe, who is a long-term member of our marketing team. He will be reviewing those questions and then making sure that they are available for us to answer as well. Tyler, are there any questions that we have had so far that we need to answer?
Not yet, Molly. There is a specific question. We'll reach back out to you, Shelley, directly with that one.
Okay, wonderful. So as we come forward, a couple other things to get us ready for W-2s. We want to make sure that we are taking a look at those 401k contribution limits. We did see that contribution limit for 2021 be a maximum of $19,500. And then, of course, the employee catch-up limit for those employees over 50 years of age, $6,500. It's important to recognize that your employees who have turned 50 or during this calendar year, regardless of when in the year their birth date is, they have the opportunity to contribute that full $6,500 into their 401k or their retirement plan for those limits. We do want to make sure that we're taking a look at those limits again as they're going to apply to our W-2. It is much easier for our employees who have maybe over contributed to make that correction with your provider before the end of the year. They can receive a refund in the current year. It does obviously then convert any over contribution back into taxable income for the current year, but it's considerably easier for your employees to manage those over contributions in the current year than it is for them to receive a refund from the provider in a future year and have to claim that on their future taxes. Our retirement elections and deferrals are reported in box 12 using the appropriate codes, and then also indicated in box 13 that the retirement plan has been in place. It is an interesting but really regular challenge that we see with W-2s that are submitted that come back with errors that an administrator, maybe a first-time user, or someone who might be managing the 401k contribution or the box 12 listings will forget to make the indicator mark in box 13. So just a friendly reminder that if you are adjusting forms, whether it is within Dynamics GP or your accounting system, or whether you're doing it in the Greenshades year-end forms product, that if you do have deferred contribution amounts, right, 401k, 403b, 457b, when we're entering that information into our box 12 with the appropriate codes, and I did include the codes here. We aren't going to go over all of them today, but they'll be here if you have any questions on those, right? We're entering those into the appropriate box 12 with the code, but also making sure that that indicator is marked. One of the other interesting challenges that we see sometimes is that for our contributors who are entering in our box 12 codes for 401k contributions, sometimes we will see them actually enter that into the form down on box 12D, right? Because the code is D. That's an acceptable way to make sure that that's entered, but in reality, if you have only one box 12 amount, it really should start with box 12A. This becomes a little bit more important when we e-file, because what happens is if we have it in one of the other fields, we're passing along no information until we finally get to that box. So please make sure that if you're manually entering this information in, whether it's in your payroll system directly or your W-2 form directly, that if you only have a single box 12 indicator, that you are using that first line. Any questions on any of that, Tyler?
Nope, not currently, Molly.
So we like to touch on those items because they are some of the more common errors that we see, and not because our payroll practitioners don't understand how the information should be managed, but sometimes when we're adjusting individual information in a W-2 in our payroll system or in the year-end forms component within Greenshades, sometimes we will accidentally delete information as we're very focused on a specific field. So these are the types of things that before we're getting ready to e-file, before we're getting ready to fill out our employees' W-2s and mail those information returns, quick spot check gives us the opportunity to make sure that we haven't accidentally made an adjustment that is going to cause either our employees to have questions when they get their information return and are wondering how to populate their information for their own individual tax reporting on their 1040, or could potentially cause errors with those files as the returns are received by the Social Security Administration and eventually reconciled with the IRS. Another quick reminder, this is a great time of year to check for those highly compensated employees, those employees who may have made over $200,000 in the calendar year, that your payroll system has applied, if you have employees in that earning field, in that earning amount, that your payroll system has applied the additional withholding for Medicare, that 0.9% in addition to the standard 1.5%. Of course, that's an employee-only contribution and there is no employer match on that. Again, that's one of those pieces that if we don't get that information through our payroll system, it is something that the employee can have some challenges and find that they have some additional tax assessment when they file their personal income tax return. So as we are going to move forward, we've got a couple of questions within our product, within our presentation today. The first question, we're just going to give everyone a couple of minutes to answer. We ask that you collect these responses. We're doing these for a couple of reasons. The first is we're always very, very interested in the feedback from our audience. We appreciate any time we send some of our questions or surveys out, all of those individual responses. And then additionally, for our webinar series going into 2022, we are working on becoming certified to be able to ensure that we can offer continuing education credits, both for our CPAs and also recertification credits for those of us that have other types of certifications like the Certified Payroll Professional or the FPC with the American Payroll Association. So part of that is making sure that we are polling to ensure people are engaged. And then as we move forward in our presentation, the other aspect of that is also we really do care about your answers to the questions that we're asking. So we'll go ahead and close that poll out and move forward and talk about a couple of other items that, especially as we are talking about years where we've maybe had a little bit more focus on our employee benefits to help retain some of our employees or offer some incentives for those employees to stay within our organization. This is a good time of year to make sure that you have properly applied imputed income. And right, that imputed income is the value of the benefit that exceeds the non-taxable allocation available under the IRC or by the IRS. And so we've got a couple of items in here. The one we see most common is that group term life insurance coverage that exceeds $50,000. Now, of course, there's an additional different limit for dependents, but this is the premium that might be paid to increase that coverage over the $50,000. If you offered educational assistance, so tuition reimbursement or other types of educational assistance that exceeded the $5,250, right? So maybe you, as part of your recruiting effort or some of those other options, had a benefit that exceeded this amount. Any amount over that $5,250, that becomes taxable income. It's reported on the W-2, and you also will have done the withholding and appropriate remittance for the income tax on that additional imputed income, that additional benefit. The dependent care assistance, and we'll talk about dependent care here in another second, but let's go ahead and just make sure that if you've got any of these items or any of the other types of fringe benefit that we would see normally have a tax sheltration, then you're taking a look at that imputed income. Certainly if you are a restaurant organization with allocated tips, that's another one that you want to make sure you are taking a look at. Also imputed income reported slightly differently than fringe benefits. For the purpose of today's presentation, we did include some information on those highly compensated employees who may not be eligible for the tax benefit, that tax exemption. This is also the time of year to make sure you're taking a look at those employees who maybe had a percentage of ownership either in the previous year or the current year, or your employees who are highly compensated employees, to make sure that if you have had them receiving the benefit for that tax exemption for those fringe benefits, that you are now going through making sure they were eligible, and if they did not have that eligibility, going back and adjusting that so that your imputed income and those benefit items are appropriately reflected on the W-2. So imputed income gets, again, added into your box 12 series, code C, and is also included in boxes 1, 3, and 5. So this is going to indicate that these are taxable wages. They are appropriate Social Security wages, not to exceed the wage base, and also the same piece for Medicare. So the employee is responsible for paying their income tax and other tax responsibilities on that imputed income. This is how we're reporting that. We certainly, Tyler, were there any questions on any of the imputed income?
Not yet. No, Molly, you're doing a great job.
Well, I always think I'm doing a great job, but I appreciate your your good job there. I will say this time of year, one of the items I do want to make sure that we talk about when we're talking about benefits has to do with if we are giving our employees gift cards. And so we're coming into the holidays, maybe we just did something for Thanksgiving. As we see more and more employers have a higher percentage of employees working remotely and maybe not spending quite as much time in that community setting, where we are seeing employers replace maybe holiday parties or other types of celebrations like that with gift cards. If you give a gift card which has a definitive monetary value, $25 to Applebee's or $40 to the grocery store, keep in mind that the value of that gift card is taxable to your employees, regardless of how much it is. So if it's $5, it's $5 that has to be reported in box 1, 3, and 5, and is reported as well in that W-2. You want to make sure it's included, that you're including it for Social Security and Medicare and income tax withholding as well. It is one of those areas that has always been the case, but again, as we have seen over the last couple of years, with more and more employees spending less time in the office and employers doing less of those celebratory things, best of intentions offering those gift cards, just like if you offered a gift card for any other purpose, but we're seeing so many more of them come through the employer. It is important to remember that those need to be reported as income to your employees. A best practice always includes letting your employees know at the time they get the gift card that they will see the value of that gift card reflected on their W-2, and it is an item that will make it slightly different, slightly less likely that they are going to be able to use their last paycheck or pay stub to file their taxes. It's more likely that it will not match their W-2 exactly and have a need to potentially have a correction in the future. As part of our COVID response, there was an expansion to the dependent care assistant benefit that can be excluded from an employee's income for tax purposes. So for 2021, that was expanded to $10,500 for the employee from that $5,000 that we see regularly in that benefit. It is capped for employees who are married filing separately at the individual rate of $5,250. And this is something that you're going to manage with your employees based on their individual circumstance. If you are an employer who allowed for expanded dependent care as a result of COVID, and this was a reimbursable piece that you offered as a benefit, keep in mind that that amount has changed. And so for the imputed income, then we are using that $10,500, right? So only a benefit over that is going to need to be reported as imputed income. The imputed income would still be reported in box 12, but the dependent care benefit is going to be reported in box 10. And so that's going to give us the opportunity to see that broken out. Your employee is going to see it. And then another really easy way for you to do some review of your W-2s, take an eyeball on what you see in box 10 before you send your W-2s out. And if something does exceed that $10,500 limit, you want to make sure that you're putting some extra eyes on that to double check that you've managed your imputed income and reporting correctly, as well as the tax withholding and deposits. It is important to note that as the employer, we are responsible for properly withholding and remitting those taxes. So if we have gotten through the end of the year and we have not properly applied maybe the wage base or some of these other imputed income items, it is the responsibility of the employer to make up the difference in that tax liability. It can be handled a couple of different ways, but it's a liability that if we get ahead of this time of year, we can adjust before the end of the year, before our last paycheck, and really make sure that both the employee's reporting is correct and that we are doing our due diligence on behalf of our organization to limit our liability with the IRS, and again, also then for the Social Security Administration reporting. So a couple of things we want to talk about that are new versus the last couple of years. And so we certainly we have seen a lot of changes with the COVID response, and some of those are around COBRA management, that have had changes to our 941s and some of our FFCRA reporting into box 14 for those FFCRA hours. Those items have had a lot of changes over the last couple of years. The good news is the actual forms themselves for 2021 have not had some significant changes. So the biggest change really for the W-2s is that the Social Security Administration and IRS have agreed that for 2021, the employer may truncate the Social Security number for the W-2. Now, truncation means that you are masking a good portion of the Social Security number and only leaving the last 4 digits exposed. It's important to recognize that this is for the employee records only. And the employee records only are their copies that are submitted to the individual employee and cannot be truncated on copy A, or that red copy if you're filing on paper. Also, now we're talking about the federal requirement here. Also, in 0 cases can you truncate the employee Social Security number in the electronic file, right? So these are for the copies going to the employee. And the purpose of allowing this truncation for Social Security numbers really is to help reduce a number of different fraud items and protect that Social Security Administration, or that Social Security number as an identifier. As a result, employer identification number is clearly that number that your organization is using to communicate both to your employee and to the Social Security Administration, IRS, who manage these wages and the withholding and remittance. That EIN can never be truncated. It's incredibly important that when you produce a copy of the W-2 for the employee, that you think about the impact of what you are doing to that record and what that impact will be for the employee trying to file their taxes. So even if you are an organization that employs 1 or 100,000 employees, where you may be using an employer identification number that you think of as being protected, it is incredibly critical that the employee receives a W-2 with the EIN that was used to withhold and report that withholding from their taxes to the IRS. So that employer identification number cannot be truncated, and it must match what was used to make those deposits and validation on that 941 for the employee's wages. Now, as I mentioned, we're talking about federal guidelines here. It's important that you check with your states to identify if the state allows truncation of Social Security information. One of the reasons the federal government was able to make this available was because so many individuals within the United States have moved to electronically filing their individual tax returns. We've seen an incredible decrease in returns that are filed on paper. When an individual taxpayer fills out a paper 1040 and mails it into the IRS, they are required to take one of their copies from their W-2s that you send and attach it to that return. And that is in case there's a question on the return. In case it isn't entirely sure, then a reviewer can look at that paper copy that was provided to the employee by the employer and be able to reconcile in that way. When we electronically file, we recreate those W-2 records in the record that we are filing with, whether it's a home service like TurboTax or H&R Block at Home, whether we're going to a tax preparer, an enrolled agent, our CPA, when we're electronically filing, we're communicating with the IRS a digital copy of that return, of that information return, the W-2, and so it's assumed that the Social Security number is that of the filer. But it's important to recognize why this is happening, why that truncation is acceptable, because some of the states have said, no way, Jose. And those states in general still are seeing a large number of individuals that might even file their federal return electronically, but are still filing to the state on paper. And the states still want to be able to reconcile those Social Security numbers. There are a couple of other reasons that some of the states are saying that they wouldn't allow truncation for the Social Security numbers. So if you have a question on your specific state, you can certainly reach out to us. We'll be of whatever help we can, but it's always a good idea as an employer to make sure you're up to date on the most current filing guidelines for any of the individual states you have employees that work in, and as a result have to receive those W-2s. That being said, if I've fielded a couple of questions in the last number of weeks about this particular guidance. If you have employees in a state that do not have state income tax withholding, just keep in mind the states cannot make an adjustment or mandate what is on the federal copy of the information return for the purpose of filing the federal taxes. So there are 7 states you don't have to worry about at all if you have employees in any of those states that have no income tax withholding. Okay, we want to make sure that we're filing on time. Quick reminder of the deadlines, recipient copies and filing copies, whether you're filing to the Social Security on paper or electronically, are due the last day of January, which this year is not on a holiday or a weekend, so it is January 31st. It's a really good idea to consider electronic filing with the Social Security Administration, even if you have not previously been required to do so, or if you don't currently believe you have the form count that would make it required. That electronic filing expedites the opportunity for the Social Security Administration to reconcile their records with the system that is then going to be accepting those tax returns and helps to reduce tax fraud. The purpose of a couple of years ago, speeding up or accelerating the deadline for those filing copies to the Social Security Administration was to help streamline that process and protect our citizens from income tax return fraud. So if it is something that you are able to do, electronic filing is something that is preferred by the Social Security Administration, as well as is a nice thing to do for your employees to help limit the exposure to bad actors for income tax return fraud. In a similar vein, talking about fraud, promoting electronic consent and distribution of W-2s in a digital format is a great way to help reduce liability issues with physical copies of those information returns being misdelivered, missing, or late, while having some additional guidance and governance over who is receiving that copy and being able to do some reporting on when people have had the access to their information. Unfortunately, we have found over the years that one of the still remaining highest access points to personal identifiable information, not only for income tax return fraud purposes, but also for access to that identity theft in general, is people simply farming the mailboxes during January and looking for those copies of the paper information returns that must be marked with important tax information included and plucking them out of the mailbox. It's something that we see the IRS and Social Security Administration trying to make motions to limit some of that exposure, but as you're talking about compliance, there's not a requirement to electronically distribute. Certainly when you are electronically distributing W-2s, you want to make sure that you are complying with the requirements of distribution, and the IRS has some very clear guidance on what constitutes acceptable electronic distribution for a W-2. So if you have any questions on what those are, we're going to be putting out a blog in the next week about electronic distribution requirements. You can watch the greenshades.com website if you would like to receive notification when that blog is released. Certainly let us know and we'll make sure you get an email notification for that as well. Otherwise, the information is available if you'd like to take a look on irs.gov, one of my very favorite websites. Sometimes a little bit of extra information out there. But that electronic consent and distribution is a really good way to make sure that your employees have controlled access of their information return. Now, as I've been talking through that, you'll notice the screen that's up is talking about the Taxpayer First Act, and that is actually the act that initiated the changes in the due dates for those filing copies, those copies to the federal government, to the Social Security Administration, and also accelerated the timeline under which the Congress is asking the IRS, and as a result, the Social Security Administration, to move to almost exclusive electronic filing, enabling them to, again, process that information much faster and catch those bad actors who might be filing incorrect or fraudulent tax returns early in the year. The Taxpayer First Act put together a schedule of accelerated electronic filing requirements, and this is the number of forms you have to have before, or that you have to electronically file if you have at least X number of forms. And so in the instructions for the W-2, this year it references the Taxpayer First Act, which says in 2022, so that's for tax year 2021, meaning January 31st, 2022, if you send 100 or more W-2s to the Social Security Administration, you have to file them electronically. In 2023, that limit is lowered to 10. It's important to note that the current instructions speak about Taxpayer First Act, but it's still a proposed change for this current year. So as of right now, the filing threshold is still 250. I want to make sure this is a piece people have in the forefront of their mind. Again, when this guidance is finalized, we will update our blog page, put some information out there one way or another, whether it changes or not. We're getting very close to the end of the year. We suspect that we will see potentially a remainder at 250, but the federal government is ready to start this tiered decline of paper returns to the SSA. Whether it is this year or next year, keep in mind, if you are not currently electronically filing, this is a really good time to think about how you will comply with electronic filing requirements, understanding that in the next number of years, we will see a reduction, getting us all the way down to electronic filing probably being a requirement for all businesses. Now, in doing that, the Social Security Administration has a number of tools for organizations who are not currently equipped to offer electronic filing. There are some opportunities to hand type W-2s into an e-filing system. There are a couple of other tools out there from the Social Security Administration. Certainly, if you are a Microsoft Dynamics GP customer, the electronic filing for federal W-2s is available to you right within Dynamics GP. Even if you have 10 or 15 employees, that electronic filing of those returns is a much faster and more accurate way of communicating that information to the SSA versus printing out, collating, and mailing in the paper copies. Tyler, I'll take a pause. Are there any questions that we should know about?
Not right now.
Okay, great. Quick little touch. Last year, the penalties for incorrect, incomplete, or late W-2s were increased. This is not breaking news, only to say that you want to make sure that you are aware that if you are filing late, incomplete, or incorrect, and that does include some of that information we spoke about earlier, not applying the appropriate wage base, as a result, under withholding or under reporting what the SSA expects, right? Not having complete or accurate information, maybe unintentionally truncating a filing copy of a W-2. We've got some increases in the penalties that can be associated with that. This is one of those items that, we never want to start talking about why we do things and having it be fear-induced. We want to make sure that we are aware of our deadlines and able to manage that information to ensure that we're prepared and we're mitigating against the potential penalties. If you do find that something has happened within your filing that has caused a challenge, then it is one of those pieces you want to make sure you get ahead of as soon as possible, because the longer you delay to complete those requirements, the higher that that penalty is going to be. So as I said the word poll because that's what I'm reading, I believe, Tyler, we might be collecting responses for an additional poll. And as we're going to go ahead and go through that, certainly want to make sure, as I mentioned early in the presentation, the purpose for today was to go through some of these changes and these items we want to talk about and make sure we're taking a look at, but also be available for any questions that may be out there as we go into this year end. I will say, as we're talking about W-2s, one of the interesting things we're finding as an industry is that this has been a challenging year for a lot of things, one of which are supply chain challenges. And so for those of you who are regularly printing your W-2s for your recipients at home, right in your home office or locally, if you have not sourced your paper, so that paper being those information returns, either the form that you're going to fill in the amounts into the boxes that are already there, or if you're using a system that prints the form and data in a single pass to a, I'll call it a blank paper with instructions on the back. If you have not yet sourced your paper, this is a really good time to start getting ahead of that. We are seeing those paper providers having some challenges in paper production. And interestingly enough, I think it's interesting. It's actually the same challenge that we saw with the building industry or construction industry late last year and early this year, and it's a lumber issue. In most cases, much more so than it is a regular paper tax form kind of concern. But if you are regularly printing and mailing those using forms that you get from your local distribution, you certainly want to make sure that you maybe order those a little bit in advance to make sure that you've got them in hand when you're ready to produce those records. Of course, I wouldn't be the Greenshades evangelist if I didn't take a second and remind the audience that for those of you who are Greenshades customers, even if you aren't a current customer, today, we do offer a print and mail service for distribution of the paper copies as well as electronic distribution of W-2s. We also print and mail 1099s and 1095Cs. So if you find that you're in a circumstance where sourcing that paper, those forms might be a little bit more than you want to think about, you can always turn to Greenshades and we can print and distribute those on your behalf. So just like the W-2s, 1099s have the opportunity for a number of those recipient copy series to have the receiver's tax identification number truncated on the recipient copies. Now for the 1099, because not all 1099s are sent to employees or individual workers, sometimes we're going to be looking at individual taxpayer or employer identification numbers. One of the important pieces for 1099s, only tax IDs for the series that you see here, the 1095C, 1098, 1099, and 5498 can be truncated. Now, of course, the 1095C are going to be employee social security number information or individual taxpayer identification numbers, but the rest of these could be a combination of social security numbers, ITINs, and EINs. It's important that if you are using the dashes to identify the type of identification number, that you are using them to appropriately reflect the type of identification for the individual, even though it's truncated. So if you don't use dashes, you don't have to worry about it, right? The truncation is always, everything is masked except for the last four, so the first 5 digits in whatever format. But if you choose to use dashes, honestly, whether you're truncating these numbers or not, the IRS really asks that you use the format that is reflective of that particular recipient's tax ID type. So if it's an individual, it's going to be the 324, right? Whether it's a social security number or an ITIN. And if it is an employer identification number, it's going to be the 2-7. This is both for the truncated copies going to the recipients and also for the copies if you're filing on paper that are going to the IRS or if you are filing in electronic format with the dashes included. So if you do use that formatting within your accounting package, this is a great time of year to take a look at that formatting, make sure that the format is reflective of the type of worker or recipient vendor that you're expecting. And a lot of times you can, again, run a quick list and see if someone's name is the pay-to name and their identifier is a 2-7. It's very possible that maybe that should be a social security number kind of format. This is also a great time of year to be using the IRS vendor tax ID number verification service. It's available certainly through the month of January, but we want to make sure that, if we have the time getting ready for year end, this is a great time of year to take an opportunity to use that system and see if we've got some taxpayer IDs that might not match the name on record for our vendors. Great opportunity to reduce some of those returned 1099 no matches and also get ahead of having to make those corrections in 2022. In moving, and again, that Taxpayer First Act has a lot of initiatives with the IRS to try to make filing taxes and managing those taxes an easier process for the taxpayer. The IRS has produced some of the 1099 types that aren't used in quite the same quantity as the 1099 NEC, 1099 MISC, and maybe would be a little bit more regularly used in small quantities by organizations to enable a PDF fillable copy that includes a print to black and white copy A. Now, copy A is normally the red copy that you have to either purchase from your office supply store or get from the IRS. It must generally be in red ink. It is how these copies are read by the machinery that receives them at the IRS. The forms that you see on the list here, however, for this year forward, if you are filing on paper, you can go and you can fill them out on irs.gov and print out that PDF in black and white. So if you happen to be maybe a not-for-profit who accepts donations of cars or automobiles, and as a result, you're filing 1098Cs, I will say this is the one we see most regularly within our customer group. Instead of having to go and get those copies with the red copy, if you aren't electronically filing, you can print these in black and white and mail them in, including copy A. You cannot use these forms if you are required to e-file. So now, of course, you can use the form to produce the recipient copies if you would like, but you cannot if you're required to e-file. This PDF option does not replace the requirement to e-file if you have over the required number of records. Very similar to the Social Security Administration W-2, the 1099 instructions have identified that in 2022, if you send 100 or more 1099s to the IRS, you must file them electronically. They do note that this is pending the IRS issuing final regulations, but they're much stronger in their wording in the current draft of the instructions. We do expect to see this 100 or so, or the 100 or more 1099s become a filing requirement. Same thing when the final guidance is out for both of those items, we will update the Greenshades blog and make sure that that information is passed along to you in a way that you're able to get that on demand. We were hoping to have that information available for this series, but it's only the beginning of December. The IRS has a lot of time. So 1099s are generally due to recipients the last day of January. Again, last day of January for 2022 is a regular working day for the IRS, and so that's January 31st, 2022. Filing to the IRS for 1099 not NEC, right? So any of the other 1099 types, end of February if you're filing on paper, end of March if you're e-filing. Again, keep eyes on the number of records that you have to identify if you must maybe be a first-year electronic filer. For those of you that don't have 1099 electronic filing software in your current stack of software available, it is a piece obviously that we at Greenshades have been doing for decades. I'd love to get you some more information on adding that to your stack of solutions from Greenshades software, but whether you use our piece or another piece, this is the time to start looking at finding a solution for that electronic filing. If you have between 100 and 250 returns and haven't previously needed to electronically file, or if you'd like to be an early adopter with that same expectation that it is going to be a quick ramp to expectation that all 1099s are filed electronically in the next couple of years. Now, very important for those of us that have workers that have non-employee compensation, so those employee replacement or workers that receive that compensation for NEC, that those NEC returns, those non-employee compensation returns we saw for the first time last year for a number of years, those recipient copies and the IRS files are due to the recipient and the IRS by January 31st. So very much like the W-2 for the same reasons, to help ensure that we have those taxpayer information items to the IRS so they can reconcile quickly to help prevent information fraud around tax returns. So for those of you that are filing 1099s, some of the changes for our 1099s for this year really are around the combined federal state filing program. The biggest change being that this year, the IRS and the states have added the Form 1099 NEC, that non-employee compensation record, to the combined federal state filing program. This enables organizations who file their 1099s through the FIRE system to the IRS to include the state records for states that participate in the program, so that those state level 1099 details will be passed along to the states by the federal government. So the states that are participating, I included here. Again, not going to spend a lot of time on them, but wanted to make them available to you, and they will be available within the handout for your review as well. If you are submitting 1099s with wages in these states and you have signed up with your state to participate in the combined federal state filing program, it is going to then mean that the federal government is going to pass that information along to your state. And in most cases, in a lot of cases, you are going to be fulfilling your requirement for state 1099 reporting. The federal government manages their side of the program, and filing through the program does not necessarily guarantee that the state filing requirements are met. So you want to make sure that you're checking with the state, even if they are on that list. Some of the states require that you register with the state to become a participant in the program. The IRS does not double check with the states to see who has and has not participated. They will pass the information as it is received to them in an acceptable format to each state if they have information to pass along. Even for states that participate in the combined federal state filing program, most states require that if you have a worker or a vendor recipient that has state withholding in their record, and we're going to see that most often for individuals who have backup withholding state requirements. Maybe they have a state ordered garnishment that has a garnishment withholding requirement, and as a result, there's an income tax implication to that. If you have individuals that have state withholding in their record, double, triple check with your state. Most states require that those records be sent directly to the state. Again, some states require that you register. If you file through the program, it doesn't automatically register you as a filer. You want to double check with your state that that's going to be taking care of that. If you are working with the Greenshades products, our 1099 federal filing product does create the record that includes both the B and K records. And these are the items that are going to be required to be included to ensure that your files are able to be processed through the combined federal state filing program. As I mentioned a minute ago, the IRS isn't going to parse through who it should and should not send. The IRS will report to all states that have a B record in the e-file. Now that B record includes the payment information. If your file has a B record, the information included is going to get sent by the IRS, and the state will get that information. In order for it to be submitted and accepted by the states, the 1099 record must include the K record. K record is that state 1099 level total, right? That's the total for the states. Without the K record, the IRS won't forward it to the state. So even if there is state-specific information by vendor in the B record, if your electronic file does not produce the K record, then it will also not be passed along by the IRS. Keep in mind, if you're a Greenshades user of our federal 1099 products and services, our records do include both the B and the K records. If you were looking for a solution for 1099 electronic filing, those are going to be some very important components if you would like to participate in the combined federal state filing program. I always like to make sure that we touch on a really important piece of information with the combined federal state filing program, and this is important whether it's 1099 miscellaneous or NEC or any of the returns. When you file through the federal program, the IRS is not sending the information to your states as soon as you send it to them. And so the states that have a deadline for receiving this information are also agreeing that they're going to get the information when the IRS receives it from the organizations, and also based on the schedule that the IRS has produced. And so the IRS only sends on a regular schedule as published. So you'll see they collect all of the information through week 14, early April, and then they make one send for weeks 1 through 13. So if you submitted your information to the IRS January 15th, it's still not going to make it to the state through the Combined Federal State Filing Program, and that's okay, until the IRS reports it the beginning of April. Now, of course, this first section, because our returns in most cases are due to the IRS the end of January, a couple, unusual return types into the middle of March, but the majority of the lift of our 1099s are going to be in this first section. But keep in mind, again, the important part is it is going to depend, when your state gets the information, it's going to depend on when the IRS sends it to them, and they're not going to get it until the beginning of April. Second, just quick note here, if you happen to be filing returns to the IRS after this first period, keep in mind that the information passed to the states is not cumulative. So each of those individual runs is only going to include the files that were submitted between the periods in question, right? So week 14 to 19, 20 to 24, et cetera, et cetera. Tyler, were there any questions there?
No questions so far, Molly.
Okay. Not a lot of changes to any of the 1099 types this year. The big change obviously last year was the introduction of the 1099 NEC. If you have any questions on those NEC returns, we have a couple of series specifically around 1099 NECs, as well as some blogs from last year, and I think we'll have another one coming out before the end of December. Talking about 1095Cs is the last real federal year-end form piece we needed to talk about. And it's really important to note that the 2021 instructions are still in draft. Unlike the W-2s and 1099s, the 1095C doesn't actually have an adjustment in their draft instructions and still states that 250 returns or more is the electronic filing requirement. The draft instructions do have the recipient copies must be distributed by January 31st, 2022. It's important to note that there has been a proposal to extend the recipient copy distribution of W-2s to March 2nd. Now, we've seen that for a number of years. And as of right now, there is a proposal that has not been accepted or finalized. We do expect to see that there is going to be an adjustment for this date, the recipient copies going out to March 2nd. It is, however, critical to note that until the instructions are released, until that has actually been finalized, it is a responsible employer's duty to be prepared to be able to comply with the current regulation as it is on the books, as it is expected, with distribution by January 31st, 2022. I'm Molly Van Kampen, super surprised as an individual if we don't see that be accepted as March 2nd, and even more probable that that will be an ongoing, instead of an each year extension, that will just be an ongoing adjustment to that due date. However, as of today, December 6th, please make sure that you are prepared and able. That includes ordering the paper if you're printing them in-house, being ready, having that information reviewed, ready for submission so that your recipient copies can be completed by January 31st, 2022. If you're filing on paper to the federal government, right, your paper copies are due February 28th, the last day of February. And if you're electronically filing, you can file electronically all the way through the end of March. Again, we haven't seen extensions to those dates. We don't necessarily expect to see significant extensions to the federal filing deadlines. We do suspect that if the recipient copies aren't due until March 2nd, that paper filing date is going to adjust, so that February 28th will adjust into the future. But again, until we have a finalization on that proposed adjustment, it's important to be sure that you have the tools in place to comply with the deadlines as they exist today. There were a couple of code adjustments that we don't see a huge amount of demand for, but if you do offer a health reimbursement agreement or an HRA, the form has been adjusted to include a couple of codes, 1T and 1U for individual coverage. And so if those are packages that you've made available in your benefits product, make sure that you're aware of those codes and how to use them for your reporting purposes. Tyler, I asked a bunch of times if there were any questions. You said I was doing great. I know we had a question we were going to reach out under, like, directly. Were there any other questions that had come up?
A couple of questions came in, but I answered them personally. There were someone was wondering about CPE
Okay.
credits,
Okay.
and then just a poll question.
Great.
Nothing else.
So in the next minute or so, if there is something that you certainly wanted some follow-up on, if you had any questions that we didn't cover, feel free to either type into the question box or reach out to us directly. You can always reach me at Molly, M-O-L-L-Y, at greenshades.com. Otherwise, if you had some interest or questions on any of the products or services that Greenshades offers to help support our urine forms production, sales at greenshades.com loves to answer those questions as well. And I, as always, appreciate everybody's attention. We want to make sure that this was valuable to you. It's wonderful to have you join us. Hope you guys have a wonderful rest of your day as we go into our last month of 2021.